Hi, I'm Varley, CEO of Eagle Business Credit. Welcome to The Money Factor. Today we're talking about the differences between online loans, ACH, MCA lenders, all those different terms, and invoice factoring. The main things to look out for, the advantages, the disadvantages, and what you should do for your business. So we get asked all the time, what are the differences, the main differences between the fees or the rates between an online loan and a factoring facility? And that's a great question because they are very different. First of all, an online loan is exactly that, it's a loan. And they operate in two main ways. First of all, you can have a loan that's pegged to your future credit card receipts. And that way the repayment comes through the merchant processor who will take an agreed percentage of all the credit card receipts that go through your account. So instead of getting that flow back to your bank account, they'll keep a certain amount back. Another very popular way is what's called an ACH repayment. And that can be a daily, a weekly, sometimes a monthly, but more commonly daily or weekly debit to your bank. It's through the ACH system, which is an online payment mechanism, usually next day. So again, it's a repayment that's constantly being taken out of your account, a daily or a weekly or a monthly amount, and that's the repayment that you make. So oftentimes the rates will depend on how you're getting repaid, how quickly you pay that back. And the loans will be quoted as an interest rate dependent on the amount you borrow and the length of time that you take that loan out and repay it over. So always have a look at the small print because, again, you have to make those payments. If you don't, you'll fall into a default very quickly. But one thing to bear in mind is that with the repayments that you have to make, it can really damage your cash flow. So if you've got a daily amount coming out of your bank account but you don't have the funds there to meet it, you could have a problem. Or you're expecting a certain amount to be in your account and all of a sudden you find you've forgotten about that repayment that comes out on a Friday and now you're short of cash when you've got to make payroll. With factoring, you will find it's not a loan. There's no repayments to make because a factor will advance funds on the receivable and they will get repaid by the customer. So the person that you've delivered the goods to or performed the service for, that you've issued the invoice, will actually make the repayment to the factor. And so you don't have any repayments to make. It is an advance on your receivables, so it's still a financial facility that helps you grow, but you don't have to worry about making those repayments. It just happens from the payment of your invoices. And a factor will typically advance 80, sometimes 90% of the invoice value to you. So it's really like getting paid within 24 hours instead of getting 30 days or 45 days credit and waiting for your customers to pay. So it will really enhance your cash flow without the worry of having to make that daily, weekly or monthly repayment on the loan. So we also get asked very frequently, what happens if I miss one of the payments that I need to make on the online loan? The answer is, as with any loan, if you miss a repayment, you could very much be put into a default situation very quickly. And we found a lot of horror stories out there of people that have missed a payment, and maybe just one payment, maybe they're just a day late, and all of a sudden they're now in a default rate. And it can get pretty scary pretty quickly. So again, if you are taking out an online loan, please make sure you know when those repayments are due, because if you miss a payment, you could find all of a sudden that you have a penalty rate that's being put upon you, or maybe they're demanding the whole amount of the loan be repaid. Most online lenders will require a personal guarantee. So even though they may advertise no collateral, well, you've signed to say you're personally liable for that loan. So they will come after you for the funds if you miss some payments. Secondly, and this is pretty scary, there is a thing called confession of judgment. And again, you may have signed paperwork without realizing what this is, but essentially it means that if you miss a payment, all of a sudden they can file a judgment against you. You've confessed to that loan. and you're in default, so they can go into collection immediately. There's no cure period. There's no way to rectify matters if you miss a repayment. So again, it's really scary stuff if you fall behind on an online loan. They have no way other than coming after you to collect those funds. Now in factoring, it's debt-free, okay? You are taking an advance on your receivables, but you're not having to make a repayment as we've discussed before. So there is no such thing as missing a repayment with factoring. We get paid by your customers, and we can work with you in good times and in bad. If there's a delay in a payment or a dispute on an invoice, it doesn't scare us. It doesn't put you into default. We'll work with you and get through the problem. So an online loan, again, look at the repayment terms. Be sure that your cash flow can meet those payments. Otherwise, you could have a problem very quickly. Otherwise, look at factoring. It's a much more friendly form of finance for your business. We are not just fair weather friends. We're there through thick and thin and can really help your business through some tough times. So we often get calls from companies that have taken out multiple loans from online lenders, the MCAs, the ACH lenders, and they're very concerned because they're worried about falling behind on some payments. And they need help. They need consolidation of those loans. And factoring is a great way to do that. As long as you've got enough receivables that we can generate the availability for, we can pay off multiple lenders, and we do this all the time. And you'd be surprised the peace of mind that it gives to these prospective clients that we talk to, just to know that we're here and we can take care of this for you. It enables them to regain control of their business and, more importantly, their cash flow. So again, we immediately relieve the debt through the factoring facility. We pay these people off, and they don't have to make these daily or weekly payments anymore. They're with us, and it's one facility, and they get cash flow for their business that's smooth and reliable. And again, no repayments to make. We handle the receivables. We get repaid through the customer payments that come to us. So don't worry if you have multiple loans. We can help you through that process and pay off those lenders. Again, if you have enough receivables, we can make it happen. So there are a lot of differences between online lenders and factoring. Some people choose online lending because it's quick and easy to sign up for. You can get a decision in a matter of hours and the money in your bank the next day. That's great, but be sure you can afford the repayments. If you're not sure, and there's maybe some seasonality to your business or other volatility, and you're not sure whether you can make those repayments, choose factoring. We're here through thick and thin. If you have receivables, it's a much simpler way to get the finance that you need to grow your business. Hopefully that helps you. It's a pleasure always answering any questions that people send in online at #TheMoneyFactor or eaglebusinesscredit.com. Thanks again for watching this episode of The Money Factor. I'm Ian Varley, CEO of Eagle Business Credit.